Hello and welcome to Business Incorporated live on Channels Television. Well, the markets are still buzzing today. Here's what's coming up. African governments are raising the stakes on gambling, not to attract bettors, but to curb addiction and fill state coffers. And after 6 years of delay, Kenya is restarting a major railway project that was stalled when Chinese funding was cut, and is doing it with a new financing strategy. Plus, oil prices spike, sending shockwaves through global markets and even rattling gold. It's great to have you join us. I'm Laddie Williams, and yes, talking about oil, we're seeing another spike again. Oil and gas prices rising sharply, not just oil, natural gas too, back above $3, 2.90% higher. Brent crude, $114.87 a barrel after touching $119 briefly, very briefly. And definitely it's all about, global supply crunch again. Qatar actually confirming that Iranian missile strikes had damaged a key liquefied natural gas export facility, and that's, sending prices higher, and we're seeing that play out. But let's get a check on metals now. On the flip side, gold and silver, they've joined a broad sell-off today, with the metals shedding around 3 and 5%. Spot silver, a big 7.54%. Spot gold, 3.77%, losing the $5,000 per ounce level. It's red across board. Platinum, palladium, no metal is safe right there, even for the safe haven trade. All right, let's get a check now on key levels to watch. That's talking about resistance and support zones. We're going to start with oil, but let's bring in Sunil Dixit now. He's the master of charting most of these asset classes. Sunil Dixit is a senior technical analyst at SK Charting. Great to have you, Sunil.
Larry, thanks.
Fantastic. So earlier you did send me some key levels to watch for Brent and gold, but let's start with Brent. What are you seeing?
Larry, as you know, I track WTI, not Brent. And for WTI, I'd say prices are ranging between $100 resistance and $90 support. And as long as the support $90 holds good, then a breakout above $100 is very likely to reach next leg higher, $105. And in case of any de-escalation, prices can relax a bit to below 90, reaching $85 and $80. This is less likely at the moment.
All right, definitely. So that's what you're seeing for WTI. That's actually for WTI. The price range $90 to $100, according to Sunil. Upside scenario, break above $100. The next resistance will be 105. Downside scenario, a break below $90. Next support, Sunil sees $85 to $80. That's if it breaks below that. But let's flip over to gold now. Gold, silver, hammered today, Sunil. What are you seeing for gold?
See, gold has shed in 2 days, gold has dropped $400. And today we have seen a low of psychological 4,600. That is also 100 simple moving average on daily charts. This is acting as a minor support as of now. And if there are enough buyers step in for value buying, then recovery will face the first challenge of 4,700, followed by 4,800 next.
All right, Sunil. So, definitely it's been a volatile week, but it almost seems like once you see oil rising, just expect gold to dip. Is that the right trade going forward?
I think some measured bounce back may be witnessed in a couple of days, because the prices are reaching oversold conditions.
All right, definitely. We'll keep tracking that. Thank you so much, Sunil Dixit. He's a senior analyst there at SK Charting. Thank you for showing us some of those resistance and support levels to watch. Thank you. All right, so see other stories now. Kenya is reviving its long-stalled railway expansion project, marking a major shift in how the country funds big infrastructure after a pullback in Chinese lending. The extension of the standard gauge railway, which had been delayed for more than 6 years after funding from China, that dried up, is now back on track under a new financing model that relies on domestic revenue streams rather than fresh external debt. The move signals a broader turning point, not just for Kenya's transport ambitions, but for Africa's infrastructure strategy, as governments increasingly rethink reliance on Chinese loans and explore alternative funding to complete critical projects. Right there. We see African states hiking gambling taxes. Governments across Africa, they're ramping up taxes on gambling as a surge in online betting. That's fueling, growing concerns over addiction and social harm. From South Africa to Senegal, policymakers are targeting the fast expanding industry to boost revenues and reining problem gambling. But the move is facing stiff resistance from operators who warn that it could drive users to unregulated, underground platforms. The crackdown highlights a widening policy dilemma: how to balance rising fiscal needs with the social risk of booming digital gambling. That's markets that is rapidly reshaping consumer behavior across the continent. And MultiChoice Group, the parent company of DSTV, is set to hire more than 1,000 sales-focused workers across Africa in a bold push to revive subscriber growth and reclaim its lost market share. The hiring drive, backed by French media giant Canal Plus, comes as the pay TV operator battles, declining subscriptions and intensifying competition from streaming platforms. Part of a wider turnaround strategy, the move signals a shift towards a more aggressive, ground-level sales approach aimed at boosting customer acquisition and expanding distribution, and also restoring growth across key African markets. We also see the International Monetary Fund has reached a staff-level agreement with Seychelles, paving the way for fresh funding of about $45 million as the country moves to conclude its economic reform program. The agreement, led by IMF Mission Chief Todd Schneider, follows strong economic performance in 2025, driven by record tourism and improved fiscal stability. But the outlook is turning more cautious. Growth is expected to slow sharply in 2026 amid global uncertainties, rising import costs, and potential disruptions to tourism, highlighting the fragile balance facing the island economy, even as reforms are gaining traction. All right, now let's flip over to the markets now. Definitely some markets closed right now, but on the continent, we see the NGX that's closed today and managed to close 200, still above the 200,000 level. Yesterday up down 0.69%, but this is still trading, the Johannesburg Stock Exchange, and it is hammered today. 3.91%, dropped 109,000 level by 260 points. EGX 30, that's also closed. Nairobi Stock Exchange closed in the green yesterday, but still focusing on the Johannesburg Stock Exchange. Stocks like Impala, Platinum Holdings Limited, Quantum Foods Holdings, we saw double-digit losses with that. And definitely when you see there's a relationship right now between the metals market and the Johannesburg Stock Exchange. When you see big drop with metals, we see that also reflects right there for the index in South Africa. So there you have it. That's what's playing out right there. They've lost key levels there from 120,000 for the all-share index. All right, let's move on to other regions now. Definitely see the EGX closed in the green yesterday, 3.38%, and the Nairobi Stock Exchange also finishing just about 9 basis points higher. But for most Gulf equities, they closed higher yesterday, with the UAE markets lifted by financial stocks after the country's central bank launched a resilience package, helping investors claw back some losses due to the Iran war and wider Middle East conflict. So that's a close for yesterday for the UAE. Back in the green, let's flip over to Saudi Arabia and the Qatari index. Tadawul 0.55% to close yesterday higher, but the Qatari index, that was the lone loser yesterday, about 10,292 points. Let's flip over to other markets now. For the U.S. futures, they fell slightly today after the Dow Jones Industrial Average dropped to a fresh 2026 low in the previous session as inflation fears. That's taken hold of Wall Street. Well, but we're seeing the tech-heavy NASDAQ futures. That's the biggest mover down, 0.16%. Flip over to Asia-Pacific markets now. They also dipped today, tracking losses on Wall Street and definitely losing some of that momentum that we saw growing. Kospi, 2.73%. Dropped there, bigger drop for the Nikkei, 3.38%. Hang Seng Index, 2.02%. Flip over to other parts of the market now. We see it's even the Nifty 50 not left out after losing the 25K level. Couldn't hold on to 23,000. That's 22,981. So we're still seeing pressure right there with most of these indexes. And, definitely looking at most of the central bankers today. We did get the result from the Bank of England. They've also held the policy rate, just like Jerome Powell yesterday, holding rates. So that's the latest right there. Another hold from the Bank of England. All right, so definitely all eyes on the central bankers. Unanimous votes, to keep the rates on hold. It's all about the war right now, and we're seeing a lot of caution coming out from the central bankers. But let's flip over to Europe. Let's see what's happening there. We have Lars Holter right there. Great to have you, Lars. I'm guessing, is the color red there? Okay, Lars, I can hear your mouth moving, but I think we have to unmute. But, definitely seeing that most of the markets are red today, I'm guessing it's also red. But let's try this again. Can you hear me now?
I can hear you well, Ladi. I hope you can hear me now.
I can hear you now.
So you are right. We have the markets all deeply in the red here. But of course, it's for the same reasons that you're seeing red on all the other markets as well. We had that double whammy here. None of the big movers here, especially European items, but just pretty much what everyone's talking about. There was, of course, yesterday's Fed meeting and investors learning that the central bank is in no hurry to lower rates there. And then, of course, way more important overnight, that latest escalation in the Middle East, gas infrastructure being hit. We're looking at the oil and gas price, as you did earlier on the show here. And of course, that does a number here on the market, specifically with Germany numbers coming out. Some analysts thinking that as they are seeing energy prices behave right now, they expect inflation could rise to up to 3.5%. And given the fact that we're barely seeing any economic growth right now, that is more than worrisome. So not a good market day here at all. All the indices pretty much 2 to 2.5% down.
We see that some new economic data out today, specifically on construction and housing right there in Germany and Europe. What can you tell us about that?
Yeah, Ladi, and those numbers actually do look pretty good. The number of building permits, 8% up over the month, same month last year. And these numbers are really way overdue, good numbers like that. The housing and construction sector has long been plagued here by crises, and it's seen 3 consecutive years of decline. The reason, of course, higher interest rates and higher costs for materials that had deterred many developers, homeowners, as well as the corporate housing giants. Now they're all coming back into the market, which can be seen really in any of the sectors here, whether that is huge apartment buildings, whether it's one-family homes. It is all not entirely surprising. In fact, researchers had expected that to happen. They cited billions in government spending as one reason, but also, of course, the stabilization of construction prices and interest rates.
So is this turnaround, is it expected to last?
Yeah, no, unfortunately not. That is exactly the problem. That would almost be too good to be true. If we take a look at why the construction sector suffered over the past few years, much of it, of course, was due to the sharp rise in interest rates and the costs resulting from the war in Ukraine, with mostly higher energy costs, but also more expensive building materials, whether that's steel or concrete. Now, if we're looking at the current situation, we see that some of these problems are coming right back. The war in Iran has, of course, these energy prices spike again, as we just said, and around half of the energy costs for the construction sector falls on diesel fuels, and that has gone way up, very expensive right now in Germany. So here we go again with costs rising and builders having a harder time staying within a certain budget. Add to that higher interest rates as the central banks might find themselves forced to hike them eventually. So that would be another hurdle then for home builders.
So what can the government do to counter these problems and, strengthen construction right there?
Yeah, sadly, not very much with regards to this very problem of rising prices. That is all outside of what the government can control. One would have to hope for a quick end to the different wars impacting energy prices and stuff. So whether that is the Middle East or Russia's war in Ukraine, but obviously one would hope for an end to these conflicts anyway. Now, what the government can indeed do, and they're actually doing it already, is invest heavily into the sector. Now, most of the government funding, of course, goes into not housing, but more into roads and bridge construction. But there is also some money being spent on residential projects and such. One problem, though, analysts are seeing the risk that billions in government spending could actually lead to unreasonable price increases again in the sector. And that could then increase problems further down the road with making construction less affordable. So even though we got some good numbers now, the sector here is really not out of the woods yet.
All right, thank you so much. Lars, definitely all eyes now on real estate and construction for most countries. Thank you for giving us the updates today.
Thank you, Ladi.
All right, let's get a check on a crypto market now. Definitely, it's red on the screen at this point. I guess digital gold tracking physical gold at this point with the big drops we're seeing with silver and gold, and Bitcoin losing that 70,000 level. Was looking like it was making a comeback to maybe 75 or maybe cross to 80,000 level, but we're seeing huge sell-off there, even with Ethereum, 3.97% lower, but still holding on to $2,000. Stable coins, we see some of them in the green, and Cardano, most of the top 100 cryptocurrencies on CoinMarketCap, all pulling back right now. All right, let's get a check on some data. I'm talking about stablecoin. There's data out on stablecoin adoption, and we see Nigeria actually leading there with USDT 59% stablecoin ownership. 59%. That's from the levels we see with other countries. Nigeria takes a huge chunk there when it comes to USDT and USDC. USDT, that's the stablecoin from Tether, and USDC, that's from Circle. So we see top adoption there when it comes to stablecoin, followed by Australia, about 34% of USDT, 29% USDC. So I see USDT leads mostly there, I guess because it's one of the oldest stable coins right there. Then we're also seeing globally for adoption, Nigeria ranking at number 1. Then when it comes to Nigeria's crypto market value, we did hear from the SEC Director General, Dr. Imamotimi Agama. He says that $96 billion total transactions for stable coins and cryptocurrencies in Nigeria. That was between 2025, I believe, and a previous year. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Hello, Ladi. Happy holiday to you.
Happy holiday. And yeah, I guess you're also one of those heavy adopters of stable coins. Huge. Nigeria stands up there at number 1 when it comes to adoption of, or that's ownership of USDT and USDC. I guess this was expected, I think.
Yes, Ladi, it was expected. It only shows that the industry is growing. A lot of young people are getting involved. A lot of people are having interest, remittances, movement of funds here and there. But I'm quite indifferent about it, because the truth is that USDC or USDT stablecoin is a digital representation of the US dollar, and Nigeria is a country home to its local currency, which is the naira. So I'm of the opinion that the authorities should see this as a way to encourage our own stable coins to thrive. I don't think it will be a plus for the USDT or USDC stablecoin to be thriving in a place like Europe. That's why they have the MiCA a law over there. So we need to also have a law here that
Right.
regulates.
But Rume, the previous administration and the previous central bank chair, he did give you guys the e-naira. Why didn't you guys adopt the e-naira?
So I have to say this clearly. The e-naira is a naira digitalized and is heavily centralized, controlled by government. And with this era of decentralization and freedom to transact, the knowledge has actually exposed us that government shouldn't control how you spend your money, where you spend your money, and who you transact with. So that is also a challenge that actually made the e-naira not to work. But the critical part of the e-naira not working is an issue of trust. The people don't trust the government, and it's something that has been in existence. Why would I give a government that actually access to my transaction or use something they created, knowing fully well that this same government banned crypto at some point? So it's an issue of trust. This same government made sure that they demonized and made cryptocurrency transactions or digital asset transactions a security issue. So ordinarily they will resist it, and I think it also wasn't well thought out. So the e-naira failed. So, but right about now, you might also heard about the naira-backed stable coins, as the CNG and a couple of others that are coming. Where I think since they have been privately owned and they will be working closely with the central bank, hopefully with all of this in place, I'm very sure that could also seek some interest, because if you look at it critically well, the naira has been gaining somehow, even more than the dollar, but still, a lot of people are still tilted towards the area of the US dollar because they have an issue of trust. And so if you also talk about the usage of stablecoin rails, this can be also implemented in using the naira. So you use the stablecoin rails, it makes transaction faster. It also gives the naira wings to fly, because you make it easy for someone sending money in and out of this country to have a settlement in the naira.
Right. All right. Let's look at the latest development with the Securities and Exchange Commission. That's in the U.S. There's been that debate about most of these cryptocurrencies. Is it a security or not? And definitely they're now saying they've declared most crypto assets are not securities, including staking, airdrops, and Bitcoin mining. How big is this?
Fantastic. This is the biggest as far as the industry is concerned. This is almost my 10 years in this industry, and I can tell you that America is currently the capital of cryptocurrency in the world. Why I said this is as a result of the statement made by Paul Alkins. We said that digital commodities, digital collectibles, digital tools, and stablecoins are not securities. It is quite clear, because securities are things that actually give you investment contract, tells you how you will make money and how and for the duration. All of these doesn't stipulate how you make money. Collectibles, I got maybe a cap design, or like the way we used to have it before, like those a monk, a crypto monk picture or something, and at the end of the day it becomes an equivalent for money, doesn't automatically qualifies it to be a security. So it's a win for the entire industry in all of this period, front and back. I'm very, very sure that the last SEC chair, Gary Gensler, will be licking his wound, because he didn't do well in this regard. And I also want to make it a clarion call to the Nigerian SEC that this that has actually come out in the US, it's a universal acceptance. So there's no way we should make changes to us and make it affect the industry, because at the end of the day, if we try to stifle innovation, we tend to, government or regulators tend to lose. People will be going to places like Ghana, Kenya, and South Africa to do stuff because their arms are open for young Nigerians to come and innovate. So I will urge the SEC in Nigeria to just look towards what happened in the US SEC yesterday and imbibe with all of these four. I will repeat again: digital commodities, digital collectibles, digital tools, and stablecoins are not securities.
All right. I guess that debate has been put to rest now about most of these cryptocurrencies that have been securities or commodities. Thank you so much. Rumi Ofi, happy holidays again. Enjoy.
Thank you very much, Ladi. Always a pleasure.
All right. So now, some top stories. See, the NASDAQ, they've received approval from the U.S. Securities and Exchange Commission to proceed with its tokenized equities pilot. According to SEC approval filing, NASDAQ can move ahead with eligible participants choosing to trade securities in either traditional or tokenized form on the same platform. Tokenization involves representing the real-world asset as digital tokens on blockchain infrastructure. Then we see Canada, they revoked 47 crypto money licenses, and they're vowing to continue. At this point, they've cited some irregularities there. Minister of Finance said it will continue cracking down on some of these crypto-related companies not following the rules. Then Coinbase user loses a case against the IRS summons in California. So it is definitely the Coinbase, one of the users there was seeking to block an Internal Revenue Service summon for access to his financial records, as his crypto financial records, marking another legal win for U.S. tax authorities in crypto-related enforcement efforts. Yeah, that we keep talking about how difficult it might be actually taxing cryptocurrencies, but that's a big win there for the IRS in the U.S. So that's how major markets are looking today. Pressure on safe haven trade, oil again rising. We'll see if this continues tomorrow, but that's the show today. Thank you for watching. I'm Ladi Williams. Bye for now.